Amazing. Hi, folks. As people trickle in, we are about to get started for our banking and budgeting virtual workshop. I know it's early, so we'll give folks a moment to come in, grab your coffee, and then we'll start soon. My name is Jessica Keegan. I'll be hosting at the very beginning here, so I'll just give folks a moment to trickle on in. Feel free to put any questions you might have in the chat or the Q&A, but I'll let folks have a moment and I'll take a sip from my coffee in the meantime. Morning for folks coming in. We'll just give the rest of the people their 8 a.m. hop on to just a moment to get on in here before we start the presentation. If you have any questions so far, definitely feel free to let us know, but we're excited to get started in a moment. Okay, so it is 8:02. Folks can come in during the agenda, so that'll be great. Again, my name is Jessica Keegan. I'm coming from the Office of Economic Empowerment. More on that soon. And I use she, her pronouns, and I'm a program officer. So today we're really excited to bring you a banking and budgeting virtual workshop. Let me go ahead and shift us to the next slide. So as you may have noticed from the advertising out that we did, this is a 4-part series. You're not at all required to come to all of them, but we wanted to be able to offer all of these sections. This training is brought to you by the Executive Office of Elder Affairs, and we're super grateful to our partners at M&T Bank for leading these presentations. So right now we have our banking and budgeting virtual workshop. There's also an afternoon session. Next Wednesday, same bat time, same bat channel. We will have an 8 a.m. and a 4 p.m. session for a credit and scam and fraud prevention virtual workshop. I know a lot of you folks are coming from COAs or senior centers, and I think that would be a great workshop for the people that you work for. Then we will have a mobile banking virtual workshop on Wednesday, the 8th, coming after that with that 8 a.m. and 4 p.m. And then again, we'll have the basics of home buying, which is a new topic that we have not touched upon yet, so I'm very excited for, on Wednesday, February 15th, again at 8 a.m. and 4 p.m. And I know you're staring at a bunch of numbers right now, but I will definitely drop those in the chat just in case you feel like you would like to register for those soon. And if you feel like, oh my gosh, this is overwhelming, just let us know, shoot us an email, say I would like to register for this, and we'll help you get signed up. So right now we're saying hello to everybody from me at the Office of Economic Empowerment. We'll go into some disclosures and housekeeping about leading a virtual webinar. Then we'll get into the meet the exciting, the presentation, the banking and budgeting workshop, and then we'll go ahead and host some Q&A time. So the Office of Economic Empowerment is a department within the Massachusetts State Treasurer. We aim to deliver programs to all residents of Massachusetts at every stage of their lives, regardless of their economic background. We also offer initiatives tailored to meet the unique financial experience of veterans, women, high school students, and older adults, which is why we are here today on this presentation brought to you by the Executive Office of Elder Affairs. And you may have noticed that this is not like your standard Zoom meeting. This is a Zoom webinar. It will be recorded and then uploaded for public use later. So for all of you folks right now, you'll get a link to the YouTube video in our follow-up email. And such as we are a public organization, anything in the chat or Q&A is subject to public record laws and therefore is not anonymous. You may notice that you can't turn on your mic or come onto video. That's because this is a Zoom webinar and not a meeting, but that's okay. If you need to talk to us, you can use the chat function or you can use the Q&A. And of course, like all of these events, we have a post survey that will pop up right when you exit out of this meeting. So if you could answer that to let us know how you like this, that would be greatly appreciated. So I will go ahead and stop sharing my screen. I'll go ahead and put those links in the chat for folks if they would like to sign up for any other sessions, and I will turn it over to our presenting partners at M&T Bank. So thank you all again for coming. And we can see your screen, Dutch. You are in presentation mode, so you might want to switch your switch your screens.
See if I it again. Okay. Good morning, everybody. So I am Dutch Kolthoff, and let me see, swap view. How's
Thumbs
that?
up. Looks good.
Now we're good. Awesome. Thank you. And thank you, Jessica, for that great introduction. Good morning, everybody. 8 o'clock in the morning. What a better way than to start your day to talk about financial education. So thank you all for taking the time to join us this morning. Like Jessica mentioned, my name is Dutch Kolthoff, born and raised in the Netherlands, so the name Dutch seemed appropriate. And together with my colleague Jordan Green, we are the financial empowerment team for M&T Bank here in Massachusetts. And our bank's purpose is to make a difference in people's lives. And we feel that through financial education, we have the ability to take that first step to help make a difference. And frankly, the COVID pandemic has only highlighted the need for financial education, for financial empowerment. And we really hope that today's presentation, together with the series of presentation, will give you some great resources coming up. There are a few goals and objectives I want to mention before we get started into the actual topic. And most important is that truly, I hope you recognize and you understand and you realize that these are all tips and suggestions that we hope will help you in your role as home care workers and supporters of the elder community. You work with vulnerable populations, and we want to make sure that you have tips and resources at your fingertips to help elders protect them from financial harm, but at the same time also have the ability to use these resources yourself, use it with your families. And it's just one in a series of resources that are available to you, right? So we have a webinar series. We have the partnership to work with M&T Bank anytime that you have additional questions or need some individual advice. We'd love to assist. There's also great information on the website, right? There's a fantastic partnership with the Office of Economic Empowerment. There's a fantastic partnership with the Executive Office of Elder Affairs, and on their website is some really good information that can help you make good financial decisions, including a Financial Life MA website where you can actually follow digital modules that are all between 5 and 10 minutes. You can create a customized learning plan and really work on getting your own financial household in order or get additional resources. I do want to mention that all these webinars are not designed to turn you into financial experts or financial advisors or give you any type of certification. Again, it's all about education. It's all about explaining financial terms and strategies. You should continue to visit trusted financial experts and advisors if you have individual needs. And while we're going to follow a topic in the presentation style, we do hope to have some Q&A time at the end. There's also the Q&A function in chat. At the end of the day, we are recording this. If we don't get to your question, you have the chance to email us as well, and hopefully we can follow up. Last and final piece, and then we jump into the topic, I assume, and that is that this is
Oop, Dutch, we just lost your volume for a moment there.
Hey, Dutch, we can't hear you. Hey, so it's all right. Dutch is having a little bit of technical difficulties. Can't hear Dutch at the moment. Hey, Jessica, can you hear me?
Yes. So Jordan, if you wanted to continue going through these goals and objectives while we get Dutch back on, that would be great. Thank you.
Yeah, wonderful. So through the objectives of our goals and objective of this workshops are really to have people pay attention to really look at our financial empowerment team and M&T Bank program throughout these workshops. And as Just was saying before, these workshops really help you and the resource that you contain from this to grow and also use these Money Mentor modules. Through the process of also continuing with M&T, Dutch is back.
No, I'm back, and I'm sorry, you know what? I was talking about how we might have technical difficulties. My parents from the Netherlands tried to FaceTime me on my phone while I was telling that and messed up the whole line, so sorry for that. But we're back. And there's a good example of what would happen if we have technical issues. So let's stop talking about technical issues and let's make sure we get into the topic. It's always fun when you have an actual real life example. So today, full agenda, we're going to talk about banking basics. We're going to talk about budgeting basic, give you strategies and tips. And again, this is part of a series that hopefully will join us next week as well when we review credit scores, credit reporting, and identity theft. But really, let's start today to talk about banking basics. And throughout the series, we're going to make sure that you are engaged, that you are involved, that you have the ability to interact with us. And we do that with an awesome poll. So let's start with a little polling. And when you think about banking, when you think about the overall basics of banking, if you could just share what you think, what type of services do you need the most from a financial institution? What are services that you would go to a bank or a financial institution? And what comes in your mind first? Is it savings accounts, checking accounts, money market accounts, any other type of account or services? So give you a quick second just to respond. When you think about a bank or financial institution, where do you go? What do you do to go see them? And are you aware to go? So it looks like most of you are indeed thinking about a checking account. And you'll find, thank you for sharing, Jessica. You'll find that that's probably the number one reason. When people think about their bank and what is a bank, you can close it out, Jess. People think about a checking account, and they don't always think about other type of accounts or services that might be available. And there's a lot of different products and services to think about when you think about banking, right? There's a lot of different ways that you can protect your money and make sure that your money is protected correctly. In Massachusetts specifically, there's a lot of choice. And we're going to talk about some of the choices that you have in a minute. So yes, there are banks, for-profit financial institutions that are federally licensed to receive your deposits and issue loans. There's credit unions, very similar, but they're normally non-for-profit and are member operated. There's a lot of non-banking financial institutions. And depending on where you came from originally, like I told you before, I'm an immigrant from the Netherlands. There's very different banking systems in different parts of the world. And a lot of people might be comfortable with check cashing services or other type of money service businesses that we see in the US that might or might not be insured, that might not be as expensive. And then unfortunately, also because of a certain distrust in financial institutions, we still find that a lot of our population thinks about their home or their mattress as a good way to safely protect their money. If there's anything you learned from my banking presentation, please make sure that if you are aware of family members or of the elderly that feel that it's safe to keep a lot of cash stashed away in their home, to not do so, right? And tell your elderly friends not to do so. There's many safeguards in place for your protection. You can rent safe deposit boxes if you want to remain anonymous, but you wouldn't be protected against theft, fire, or anything worse in your home, while banks and credit unions have all kinds of resources in place to make sure your money is safe and protected. So there's some differences between these different institutions. There's also some similarities, right? Banks and credit unions accept cash, checks, wire your money. They provide loans. They can help you with traveler's checks or travel checks. They offer a lot of convenience, right? 24 online banking, ATM cards, debit card, credit cards, lots of different accounts. So there's a lot of similarities. And also something to keep in mind is that from an insurance perspective, most banks and credit unions will look at your accounts and give you protection of up to $250,000 per person per account title. And there's different ways that you can have additional monies actually completely insured with a bank. So a lot of similarities. And while in the past, historically, banks were for-profit businesses that were known for their convenience and were open to all, and credit unions were non-for-profit that were more member-based and might require a membership. You'll see that in the last couple of decades, the line between banks and credit unions really has blurred. I live in Swampscott. I think I have 14 different banks or credit unions in a 1 mile block. There's a lot of different options and little choices for me to look at. And I'll find often that if I compare the two, there's a lot of similarities. Credit unions might have a network of ATMs now in the country. Banks, to make up for the fact that they used to be more convenient but are perceived to be not as good with rates, are more competitive in certain rate offerings. So do your homework. If you're looking to start with the bank, ask some friends, check social media. I think there was a chat earlier on how can I see if a bank is well rated. social media, the Better Banking Business Bureau. Nobody is going to always love their bank. Nobody's going to always hate their bank, but you'll find that there's a lot of good ways to compare banks and make sure that you are a bank that is very well received. And hopefully you're one of your choices. But there's more similarities and differences, I think, when you think about banking nowadays. When it comes to deposit insurance, and this is something that you should really consider with your elderly population as well. Both my in-laws live in New Hampshire. They're in their late 70s, early 80s at the moment. And they used to have a pool table that right now is more like an office table. There's many, many different documents, many different statements, many different credit card statements, many different bank statements. And when I had the discussion with mother-in-law, and she'll come up in these webinars quite a bit, she was in the understanding that it was better for her to have monies at different banks in different places, because if for some reason one bank would disappear or one bank would be the victim of theft, then at least some of the money was protected. So it's important to know that both through the FDIC and the NCUA, banks and credit unions have federally insured money up to $250,000 for a depositor per account for an account category. And what that means in fine print is that as a married couple, you can have close to $1 million and be fully insured. As a couple with 2 children, you can have 1.6 million, I believe, is the amount fully insured with one institution in banks, in credit unions. And there's other ways that they can also help you with your money. The FDIC has a website called fdic.gov, which is a really great resource to visit and to go to a deposit insurance tool. And it will tell you how much money can be insured with the bank and what type of rating that bank has. But keep in mind, if you deal with the elderly and you notice there's a lot of paperwork and just a lot of confusion around statements, here's a misconception that you might be able to help the elderly population say, you know what, let's go visit the bank that you consider the best and talk about ways to help you with all these statements and get you full insured and a little bit more convenience. Insurance does not cover every product, but checking accounts, CDs, savings accounts, money market accounts, interest-bearing checking accounts, anything that's officially owned by the bank would be fully insured. If you are looking at investments, stocks and crypto exchanges, when we talk about identity theft protection and scam protection for the elderly, there's a lot of news right now around crypto. There's a lot of rate information. Unfortunately, there's a lot of scams that are happening where people are receiving phone calls from scammers because in the past few years, the government has been so helpful in providing additional funds to the elderly. You have to be careful where you put non-insured funds through banks and credit unions. You might have access to those, but when it comes to stocks, annuities, bonds, life insurance, mutual funds, treasury bills, those are normally not insured. And again, it's important to talk to an expert and find out what is the best possible way to make sure that we protect your money. Account ownership is another key determination when you talk about both the insurance of funds and account opening at a bank, right? So you have the ability to do joint ownership, something you should discuss or with the family of the elders that you protect. It's very good for seniors and family to have an account with multiple owners. Again, my in-laws, there's the father-in-law, there's a mother-in-law, and their eldest daughter. All three of them have ownership of the account so that there's full access, deposit and withdrawals. If for some reason there was any type of emergency, it'd be very easy for the elderly daughter that's fully trusted in the family to take a look at the account and make decisions. Similar setups could be made up for children's accounts, which are normally custodial accounts. And where we see a lot of disinformation and frankly also a lot of fraud is when it comes to power of attorneys, where the account owners designate someone else to control and have access to the account. A lot of fraud in your world. Money scam artists are trying to get access to an account as a power of attorney because it's often only one document and easy to replicate. You might have some of your elderly population asking you to be a power of attorney. And we just ask you to be very careful. That comes with a lot of responsibility, and probably the best thing to do again is to take a family member with the elderly, with the senior citizen into your most trusted bank and find ways that control of an account could be set up. Account ownership is easy to create, and it's just as easy to open up an account We talked a little bit about my immigration status. If you know of people that come from other parts of the world into the US, it's pretty easy to set up a bank account, even for non-citizens, as long as you have two forms of identification, which could be US, driver's license, could be a passport, social security card or other address verification. Very often you have the ability to go into a bank and set up a safe bank account. Still much safer, much easier to do than as home mattress. And again, at the end of the day, our overall job is to make sure that you have convenient and safe access to your money, and banks and credit unions can provide that. And as an immigrant, I was surprised how easy that was to do for me. Convenience comes into play when we talk about banking as well. A lot of comparison, a lot of similarities, again, between commercial banks like M&T Bank and credit unions, where we give full online access, full access by phone with your mobile phone, to be able to look at your accounts, to look at statements, to look at transaction histories, to have a safe way of transferring money back and forth, to have a way to pay people, which makes life much easier. There's a whole session we have on mobile banking that will talk about how you can make sure your online banking and mobile banking is safe and secure, and how not to provide personal information, not to use public computers. But this is, again, an item that we wanted to bring up in this session, because if you deal with the elderly, just like my mother-in-law, if there's a lot of statements, if there's a lot of paperwork, if there's a lot of confusion around financial activity, having online banking access for the elderly that maybe a family member has access to might help make things a little bit easier and less inconvenient or confusing. So we don't spend too much time, frankly, on this topic, because we want to make sure that we get into budgeting, but a lot of good financial institutions, a lot of great safety and protection when you think about financial institutions. And hopefully we gave you a couple of ideas on how you can make sure that banking overall is easy for the elderly as well. So I'm going to quickly look at the chat. And again, I apologize for the early mishap, which gives it a little behind. But I am going to make sure that I catch up, so I speak a little faster. So let's move on to our next topic. And the next topic is budgeting, right? And like before, I'm going to make sure you're still here. I'm going to make sure you're still engaged and my sound still works. So let's start with a poll. When you think about budgeting, which is not the most fun topic at 8:30 in the morning, why don't you want to budget? What are some obstacles to budgeting? Do you think it takes too much time? Is it too complicated? Is it too stressful? What is your reason, your opportunity, your excuse not to budget? Go ahead and slide in your answer, and we're going to see what people said, and we're going to go to the next topic. What are some obstacles to budgeting? Go ahead and close it out, Jessica. Too much time. It takes too much time. All right, close it out, Jessica. So I appreciate the honesty in that answer, right? It takes too much time. People believe it takes a lot of time to budget. It's complicated. It's just a lot of hassle, and it costs a lot of stress, which might not be worth it. And at the same time, I think we all realize that it's quite important to budget, right? We're going to have to make sure we live within our means. It can help you pay down debt. It can help you save for the future, and work for the emergencies. What's often the case, and what we don't see here, is that often budgeting is a mental block, right? Many times people think, you know what, you only need to budget if you have a lot of money. Because I live paycheck to paycheck, so budgeting won't really help me because I barely get by. So putting it all down in an actual budget or savings plan won't matter. And hopefully today we're going to show you some ideas, some suggestions that would actually help you understand how important a written budget would be. We actually call it a savings plan because it can help you set some goals, get you into a certain habit creating environment where you can make sure that goals are met. And again, I came to the States without learning about the US financial system and without having a written savings plan. I don't think I would have been able to accomplish some of the things that I'm happy to accomplish. And I've also learned that it can actually be quite easy once you have it set up originally. So the first thing to do if you want to stick to a savings plan is you got to make it personal. Right? It's very easy to say you're going to go on a diet, but if you don't really truly believe that you want to lose weight and you haven't really looked at those pictures that you are overweight, it might not hit you mentally to the point of, you know, this is important to me, I really want to do it. So overcome that mental obstacle and visualize a goal, get a specific goal in mind, and then put those goals into short, mid, and long-term goals. I actually would recommend taking pictures of some of those goals, right? So your short-term goal, which is less than 3 years, is to pay off your credit cards, setting up emergency savings. And let's say if you want to save for a trip to Hawaii, take a picture of Hawaii and put that right on your computer screen or right on your fridge. So every time that you are thinking about spending some money, every day you have the little mental reminder, no, I'm saving for Hawaii. Same thing for a midterm goal, 3 to 10 years. Are you looking to get a down payment on a home? Are you paying off some debt? Are you buying a car? In my case, it's a boat. I took a picture of that boat and it's sitting on my fridge and I look at it every day because someday I'd like to have a boat. And then long-term goals, retirement, paying off a mortgage, creating a college savings fund. Similar ideas. There are certain retirement place you'd like to live. Is there a certain school you'd like your kids to go to? Take a picture of that and plaster it all over your house so you have mental memories every single day when you're trying to have a savings goals. You can even go to your bank and you go online and your savings accounts, you can create different savings accounts and nickname than the name of your goal. So you can have, instead of just a standard savings accounts, when you go online or when you go to the ATM, it could say my Hawaiian trip, my boat purchase. So mentally, if you're looking to transfer money from savings to checking because you want to pay a bill or you think you need to set it up, you'll have the mental ability to say, oh, do I really want to take money from Hawaii to do so? Wouldn't it be easier? Is there another way I can make this happen? So set your goals, make them personal, visualize them, will help you with the first step of setting up a savings goal. And then the second piece, and this is not the fun piece, and the person who mentioned that budgeting takes a lot of work, this is the part that takes the work, right? You have to initially create an organizational setup where you communicate and track everything that you spend your money on. So for 3 months, collect all your sources of income, collect your receipts, if you still use receipts, collect your credit card statements, your bill statements, make sure that you communicate together with your partner and say, all right, let's sit together and let's make sure that we understand from each other where we spent money on. Let's pull our bank statements together. Wow, I didn't realize we both paid for this membership. Oh, I didn't realize that every month you pay for Apple Backup and I pay for Apple Backup. I didn't realize we spend this much money on certain entertainment options. Comparing it with your partner, making sure that the same amounts don't come up twice might right away make you realize, oh, wow, there's ways we could save money. M&T Bank has a budgeting app right as their online tools. And I believe there's online apps like mint.com. There's other great resources available to automate this process for you, where you can enter your income, where you can enter your debts, where you can enter your payments, you give access to your partner, and you have the ability to kind of very quickly and easily see where and how your money is spent. This is the hardest part of creating a savings plan. You got to make sure that you take at least 3 months worth of activity and truly get a good feel of where your money is going, what is coming in, how you have it set up. So you have your goals, you have yourself organized. So let's go then to the next step, excuse me, and that is creating this budget or creating this savings plan. Again, you can go online and find a lot of different resources, budget strategies you can use. I'm going to focus on one of them, which is the 50-30-20 rule. There's a lot of different options, just like there's a lot of different diets. What I will recommend, I don't say pick this rule, but once you pick a strategy that you can decide on, that you are completely comfortable with, pick that plan and stick to it, right? Give it some time and make sure that at least for a few months, you get into the habit of following whatever strategy you use. The 50-30-20 rule is pretty simple. 50% of all your income should be spent on needs, 20% should be spent on savings and or debt repayment, and 30% should be spent on wants, right? So there's a couple of terms there we're going to discuss in detail: income, wants, and needs, and then debt repayment in this specific strategy. So let's start with income. Gross and net income, what's the difference? Gross income is the amount of money you earn before anything is taken out for taxes. And the net income is the amount of money you earn after all taxes and other payments are taken out. If you do have the option to join a 401k program or other savings option through work, I strongly recommend you take the opportunity of that. right? There might be matching funds that the company offers. So that is definitely between gross and net income. That's one of those categories you want to make sure you take advantage of. But once you have your net income, the money you have earned after all your taxes and other savings items are taken out of your pay, that amount of money, your net income, is where you start with when you're going to say, all right, net is where we're going to start with to start our savings plan. And then we're going to look at our wants and our needs. Now, this varies again per person, just like there's different diets, there's different strategies around savings that will work for you. Wants and needs, what is truly important to you as a person is very different than what might be important to me. We often talk about coffee. Coffee is listed here first as a want or a need. And if this was an interactive session, I would ask you to list wants and needs next to each other. And some of you might say, well, that's a want, I don't really need it. Other people are like, oh no, I can't live without my coffee. My wife will tell you that this is definitely a need in life. What's important about a savings plan and what's important about a budgeting is that it's unrealistic to expect anyone to get rid of any wants, any fun type of expenses. This should not be about you giving up your coffee. This should not be about you not going out to eat, not having fun and entertainment. But is there a way that you can manage your wants and your needs so that you can start saving a little money, right? It's important to have a savings plan that will work if you take the time for yourself on some good activities. So I'm going to use an example for $2,200 a month income, where the needs are listed for $1,835, the wants are listed coffees, restaurant, entertainment, clothing, salons for $330. I got some minimum payments for credit cards and student loans. And the difficult thing in this example is what we see a lot, almost on a daily basis, is that the overall expenditure is $2,265. So here we have an income of $2,200. Every month, the cost is $2,265. So this person is $65 short every month. Now, through credit cards and by spending a little bit less one month and a little bit more the other month, you're probably able to cover that $65. But what's missing in this example is my savings goals, my dreams, my vacation to Hawaii, the boat picture. I don't have the ability to continue to save. I'm going to look at my needs. All of those are quite important, right? Rent, groceries, utilities, car payment, car insurance, transportation to get to work, health insurance, medical expenses, internet and phone, childcare. It's tough to say that none of those are needs, but I also don't want to get rid of all my wants. So how can we make sure when we look at this picture that we find a way to meet our goals and take a look at what we can do to create a savings plan? So we either need to raise our income, right? We need more money, or we need to lower our expenses. So what are some ideas? What are some suggestions that we can do that? So lower expenses, raise income. Raising income is not easy, but truly the one way that you can raise your income is item number 4, freelance work, gig, an additional job. If there's one benefit that has come out of the pandemic, truthfully, is that working from home or the opportunity to find jobs that allow you to work from home, side hustles have expanded. There's more choice now to be able to have a job that might not require you to commute, that might not require you to take a lot of time away from home. Translation services, writing services, anything that has to do with something that you're passionate about. You might be able to get some additional income through freelance work, through a second job. For the longest time, I continued to work at Best Buy. My very first job in the States was in retail, Circuit City, which is now gone, but it was Best Buy. I continued to have that job until 3 years ago, even though my financial situation had changed, frankly, because I loved electronics. So every Sunday morning for 4 hours, I would go to Cambridge and I would set up all the pricing before the store opened, listen to my Dutch music on my headphones, made a little extra money on the side. That was my fun job. If anybody from M&T Bank is on the call, banking by itself is boring. Sorry, I said that out loud, but I was able to find a connection with electronics that I love doing until I really got invested and fully excited about financial education. I continue to still have that. So that was my side job, little extra money. But most of your ability to free up funds is going to be around debt management, reducing your spending, taking a lot of resources that are available that might help you reduce some spending. And if you have any tips or suggestions, feel free to share those, and we can share them later as well. Let's take a look at a few of these in more detail. Reducing debt. Not a surprise, if you have credit card debt, you'd like to get rid of it, and you'd like to pay more than your minimum payment. A mistake that we see often happen, and we see it in the elderly population as well, is that either we continue to apply for credit cards with low interest rates, so we have multiple credit cards, or because we have so many credit cards, we make the mistake of just paying a little bit more on each card. Every month when we think we have money, we just pay a little bit more on each card. So there's two methods that can help with that. One is called the avalanche method, one is called the snowball method. And they're both great. And just like with the overall suggestion, if you decide to pick one of these methods, stick with it, don't change it, and follow it through. The avalanche method lists all your debts from highest to lowest interest rate. It then makes sure that you meet your monthly payments, but then you start any additional funds you have, you start applying to the highest interest rate credit card first. The second is the snowball method, and instead of looking at interest rates with the snowball, you look at the balances. So you list your debts from smallest to large, you make sure your minimum payments are made, and then you take the smallest balance to pay off first. Why do that in both cases if you have multiple cards? So you can celebrate. Once you have one of these cards, one of these loans paid off, celebrate. Go out for dinner, high five the family, have a little fun with the fact that you reached one of your goals and you reduce your debts. Now you can take these extra funds that you saved to pay towards your next bills, to move towards savings, or to set up for emergencies. Right? But again, one of these methods, don't pay a little bit extra on each card. Just take the extra money that you might have after minimum payments and either apply to the card with the highest interest rate or apply to the cards with the smallest balance. Stick with that plan and you'll see very slowly but surely that your debts overall will get reduced and you might have some money to start saving. Second way to reduce spending. We can spend a lot of time just on this slide, and there's tips and ways to reduce spending that actually can work for each person differently, even if you think you work paycheck to paycheck. So some of these have worked for me. I'm going to bring them up because they worked for me. But you might find that not all of these are general and could work for you. So these are just examples that I've been able to use to reduce some spending. Now, I'm a married man. I have 2 teenage daughters. So the very first thing I looked at, and I should have highlighted, was reviewing my cell phone data and look at my cable and entertainment expenses. I found out that our cell phone carrier, when you go to their website, shows you a history of the activity for the last 6 months. And we had a plan that was not unlimited because 4 out of the 6 months, we didn't use a certain amount of data, right? Because we were in the house and we used Wi-Fi. However, those 2 months that we did use data, we used it a lot, either through travel or through school, whatever the case might be. So it was actually more advantageous for me to switch carriers and sign up with a new plan with unlimited data versus sticking with the older plan that had more of a mix. So even though 4 out of the 6 months seemed better, when I compared it over the 6-month window of time, I found it was better for financial reasons to actually switch to different plans. The same thing with our cable plans, cutting the cord. Does that make sense? I don't know. We paid for cable. Then we had to pay extra for an HDMI connector. Then we had to pay extra to be able to record the show. So that was just for cable. And then because my kids are teenagers, everybody in school talked about Netflix and Spotify and Hulu and all the other different $10 per month subscriptions. So when we put it all on the list next to each other, it did make more sense for us to cut cable and sign up for something called Sling, which is $25. We had to give up some channels that I liked, like I don't have ESPN anymore. But my overall cable bill went down from about $220 with all these extra add-ons to about $140. Now, $140 is still a lot of money to pay for cable. I get that, or for TV, but I'm not going to give it up because I do like to watch TV. So this is one of those examples that we looked at the need and the want, and we said, all right, there's a lot of options that we consider needs, but how can we save money on? Reviewing subscriptions is important. We found that there were some subscriptions to gyms, to the YMCA, that we actually didn't use. So the YMCA in Swampscott for a family was over $100. We still have a membership to a gym that's $20. We saved some money there. We are members of BJ's Club. That's $110 a year. Ooh, is that a lot of money? Sure, but if we compared it to shopping separately at Stop and Shop, it made sense for us to continue with BJ's. We did make sure that at least once a month, my wife and I look at grocery shopping together, because many times I would go to BJ's and she would go to Stop and Shop, and we would end up buying similar items and throwing out a lot of especially veggies, which then brought us to shopping with a list. We have the Alexa system in the house, and anytime that we're short of items, we just tell Alexa to add something to a shopping list. We only go shopping with that list. We only go shopping a specific day of the week. We don't go shopping when we're hungry. We don't go shopping when we're out of something quickly. Because often when you just run into a Stop and Shop or a grocery store for one item, you walk away with 3 or 4. And then with coffee, we gave up Starbucks. We bought an espresso machine and we buy coconut milk. And my wife was able to say, all right, the coffee that cost me $5 or $6 a day at Starbucks that I really loved, I've found some type of an alternative. It's probably still $4 a day because he uses 4 of those little cups, but it's cheaper than it was. So we found some examples in our day-to-day life where we did not cut out anything. We didn't stop anything, but just by comparing items and looking at items, we were able to say, all right, we might be able to save a little money. Don't quit, reduce. Very important piece to take a look at. And another rule that we implemented had to do with deals and shopping. Can we wait 24 hours to decide on a major purchase? And a major purchase in our home is anything over $500, because there's some school cost. But that's something you could talk about within your family. What do we consider a major purchase? Is something defect or damaged? Does it need to be replaced, or can we fix it? And should we talk about it as a family before we decide to splurge on a certain amount of money? Will you use it? Do you need it? So just some suggestions to reduce spending. And again, there's a lot of different ways. There's fantastic information on the internet, great tips and suggestions and strategies on how you might be able to spend and save differently. My only suggestion, and I brought this up a few times, don't quit. If you're a smoker, great, continue to smoke. I'm not going to tell you you should stop smoking. I imagine you know from a health perspective, it's not a good idea, but can you reduce the amount of cigarettes that you smoke? Same thing with any other want or need. Take a look at what you spend. You have that 3-month worth of expenses. Do you really need to spend that much money on certain items, or can you reduce some of the items or spend it differently? Can you take one less haircut a month? Whatever the case might be, if you're truly dedicated to a savings plan, you're going to find that some of your wants and needs can be reduced a little bit. We were able to do that, which then said, when we looked at our example, when you take a look at the example a little bit, nothing has changed. Every single item that was on my original example is still here. We just reduced some of the items. Now, we did not reduce our rent. And again, this is $600. I realize it doesn't look like a lot, so hopefully there's a roommate. We didn't reduce too much on our groceries and utilities. We were able to save money on our car payment and our car insurance just by switching our lease. I didn't change transportation expenses or health or medical expenses. We were able to save, like we talked about, our internet and phone expenses. I didn't touch our childcare expenses, but we were able to save some money in our needs. When you look at our wants, we probably cut that in about half between coffee, restaurants, entertainments, clothing, and salons. They're still all there. We didn't stop any of these items. We just made sure we reduced some of our wants. We still had to pay our credit cards and our student loans, but using the avalanche method, we were able to start paying down our debts and found ways to save. And all of a sudden, here's a new category. The most important category on any budget and savings plan. Pay yourself first. We now have $100 a month in this example for savings. So we are paying down our debts. We still have our wants. We still have our needs, and we found a way to save. And if you look at the total, we're actually at $2,200. We're not overspending every month anymore. Now, it's not 50, 30, 20 just yet. And this is more 70, 15, 15. But we have a plan in place to help reduce our debt so we can start increasing our wants again or start increasing our savings, whatever the case might be. And we have the ability to every time take a look and find on a monthly or quarterly or yearly basis, see the progress so we can celebrate. So even though these are all categories that you looked at, you're like, well, those are all important to me. Just by taking a look at 3 months worth of expensive and talking to family members and talking to people in the household, we were able to reduce the amount of money we spent each month and come up with ways to save. We had a plan and we stuck to it. Number one thing you need to learn from today, have a plan, stick to it. So just to wrap up some saving strategies. If you have the ability to pay yourself and make it an automated way, do so. So I talked about the 401k plan that can go into a savings account before it's taxed. Set up an automatic savings plan. Split, if you can, your pay between a checking and a savings so that money automatically goes into savings and it's not even part of your net income calculation. 1%, 2%, 3%, whatever amount you can have automatically moved into a savings account will help you reach your goal quicker. I would recommend that you actually unlink. This is something you can do with your bank. Unlink your savings account from your ATM or debit card. Again, it's one of those mental blocks. When I go to the ATM machine, I do not have the option to move money from my savings to my checking. I have to either go online and look at where it says Hawaii, or I have to go into a bank and have somebody help me move money from my savings to my checking. I don't want to be too easy, right? And this is a way that I was able to do so by unlinking these two accounts from my card. I don't have the ability to quickly transfer money from my overall goals to my day-to-day expenses. But the number one rule is automation. Set automatic saving strategies, set automatic percentages to go into the savings account. Don't do it yourself, do things automatically. Prepare yourself for emergencies. It's so exciting to have this fantastic plan and to stick to it, and then something happens. So protecting yourself is important because any emergency could derail the best plan. And what we did, and one suggestion I might have, if you know that the average emergency or imagine the average financial shock is about $2,000, there's a lot of different rules around, okay, how many months of living expenses should you put aside? 3 months, 6 months, whatever the case might be. It's important to have an emergency plan in place. What that meant for us, first we had one of these savings accounts was called our emergency savings. And once we were able to pay over credit card, we didn't close that credit card out, we locked it up and it's our emergency card now. So we are continuing to save, and if there would be an emergency, I have a credit card handy that could protect an average type of emergency. That's something to keep in mind when you talk about savings plans and when you talk about budgeting. You want to make sure that you also protect yourself and have some type of insurance in place to protect yourself. All right, I'm going to wrap it up. So we're getting close, 8:48. Thank you for sticking with me. I know this is a lot of information and a lot of a download. But again, focus on rewards. Don't quit, just reduce. Celebrate when you have the ability to reach one of your plans and reduce some of your expenses. Make everything automatic and create those goals and those wants and those needs, and have automatic payments or automatic savings set up to help you reach those goals. Get real-time spending feedback and set reminders. Your financial institution can help you set reminders, can help your elderly population set reminders. So when you spend, if your overall balance of your checking account falls below, let's say $100, you can tell your bank to send you a text warning you, hey, what's going on? My 18-year-old daughter, almost 18, is an authorized user on my credit card. Every time that she uses the card, she doesn't like this, but I get a little notification that she's using her card. It helps us communicate about what's happening. Budgeting applications, budgeting apps, the different tools and resources that a bank has. Go to your bank, go to your financial institution with your family or with the elderly and say, hey, what are some tools in place so we can reduce some of this paperwork and reduce some of these expenses and can try to make our whole life a little bit better than it was before, and stick to that plan. Part of the plan is education, right? So you took a first great step already in setting up what we're doing here today. You're going to be asked when I finish, and when this finishes, there's an exit interview, and I ask that you send some feedback around the the topic, and hopefully you have some feedback around the information of the topic. This is part of a quarterly series, pretty much. We did this last quarter. We're doing again this quarter, and I hope to be able to continue it. And we want to continue to improve our topics. We're going to improve the way that we present. So please complete these exit interviews, give detailed feedback and honest feedback so we can improve going forward and help you and the elderly. Go online, Office of Economic Empowerment, the Executive Office of Elderly Affairs. If you haven't gone through their website lately, please do so. There's a lot of resources after the pandemic that have been shared that can help you make financial decisions for yourself, but also give you resources in your day-to-day activities as an elderly home care worker that can help. MyFinancialLifeMA.org offers these digital modules and these tools 5 to 10 minutes. I have my kids go through them because it talks about that there's different topics that can help depending on where you are in your financial journey, and savings and budgeting are part of them. And then lastly, you register for next week. I'm going to hand it back to Jessica, but there is, again, every week, we're going to have these topics that can hopefully help you continue to learn and continue to get better day to day. So I am looking at the chat. I don't see any specific questions. So before I hand it back to Jessica or end, just want to see if there's any specific question, any Q&A, any specific piece I could give you additional advice on.
I know that we have a lot of folks from organizations that directly interact with older adults. I know we have some folks from Council on Aging's here, some senior centers, and some nonprofits that focus on working on elder services. So if you have anything you'd like to ask about your residents, or if you're broadcasting to them right now, definitely feel free to put that in the chat or ask in the Q&A. Or if you're not in a position to share right now, definitely reach out to us via email, and we'll share later too.
Yeah, we have a great partnership with Jessica and the Office of Economic Empowerment. So if questions come up, if you're like, hey, how can we make this type of workshop available to our residents? Is there's a different way that we can educate a larger group of people? We have a travel show, both Jordan and myself, either through webinar or in person, can help visit and really make sure that, again, our number one goal is to help people make better financial decisions and uplift our communities. That's what M&T Bank is all about. That's what Dutch and Jordan are passionate about. So if there's ways that you feel we can impact your communities and your families, just let us know. Jessica just popped her email in there, and we'd love to do so. So with that, I'm 5 minutes early, even with the technical thing that I'm going to talk to my parents about. So appreciate everybody's time, and I'm gonna stop talking.
Amazing. Well, thank you for talking for the past half hour, 45 minutes. That was a fantastic presentation. Again, if you would all like to come to any of the next sessions, I know that this is a repeat topic from our previous quarters, so some of you may have heard of it, but we can definitely go ahead and have more interesting topics that you may not have heard before in the coming sessions. And like Dutch was mentioning, the OEE and M&T partner a lot to give a lot of workshops to places like senior centers or specific networks. So if you feel like you would benefit from having a workshop like this to your audience, definitely reach out and we can try to put something in the works. So thank you again, everybody, for coming. And we hope to see you next Wednesday. And thank you to our partners at M&T for the fantastic presentation.
Have a good day. Thank you.
Thank you all.
Thank you.